Alright everyone, welcome to the channel, Cowboy Trades here. So, Bitcoin and the stock market make new lows on this day. Let's talk about it. This is going to be another one of my quick form updates. I've got quite a few things that I want to discuss today, so there's going to be a few of these shorter topic videos. Now, previously, we've been looking at this 2008 SPX fractal, and we've used this to call the exact local tops and local bottoms many times. We've previously been looking at this on a weekly time frame, and as you can see, bear in mind we've retroactively fit the top, so we can't talk about this data point, but this local low was well choreographed. This top was a couple of weeks off, but it was pretty well choreographed. You can also see the breakdown with a pump called on this week, breakdown lows called on this week, pump up, local top predicted on this week. If you've been a veteran of the channel, we've been using this SPX fractal. We've been looking at things like the NASDAQ fractals, the VIX fractal from 2008. These have all helped us to navigate the market. Now what I want to do is I want to go into a lower time frame perspective. Let's zoom in. We've previously been looking, like I said, at this 2008 SPX fractal, but we took a weekly grab of this, meaning that we can't see the day-to-day volatility in the markets. This is why we went all the way back before I recorded this video to 2008 on the daily time frame and copied exactly what happened in the 2008 recession, and this is what it predicts. Now, one thing I do want to say quickly just before we do jump into this is not only is the fractal lining up beautifully, but the timings are lining up beautifully. You can really see the breakdown, or the top of the SPX was really round about that late Q4 2007. And then you can see the final, well, pretty much the final capitulation came end of year Q4, and we were bottoming round about Q1, which is pretty much what I've been predicting on this channel. I've been saying the final capitulation's right around the corner. I think we bottom. I think it's kind of a little bit of a stretch to say we bottom in December. I think, January, February is more of a likely target in my opinion, especially when you look at the SPX fractal. Bear in mind it's different for tech stocks, so we should probably look at the VIX. The VIX is predicting that Bitcoin and the stock market bottoms basically late January, February. So like I said, January, February is really when I think the absolute bottom is. But for the next move, daily time frame, let's zoom in. As you can see, perfectly choreographed what we've been doing so far. And when are these new lows going to be taking place? Well, according to this fractal, it should be round about the first week of October. Now, bear in mind, this has been about 7 days off in some of the most recent peaks. So while on the weekly time frame, the absolute top was beautifully choreographed, if we come over to things like the daily, you can see the most recent top was actually 1, 2, 3, 4, 5, 6 days off, which is why when it says the lows are down here around about the 3rd of October, you know why I'm predicting for Bitcoin and the stock market to make new lows before October the 10th. Be sure to follow me over on Twitter, by the way, at 618_cowboy. Now, I want to wrap up this video talking about one last comment and tying this into tomorrow's FOMC. Now, I've had a few questions on YouTube and on Twitter and on Instagram. Quite a few of you have messaged me about these fractals. Some of you are very interested in these. And I've had messages ranging from either this doesn't make sense to compare it to 2008 recession, or or people just being shocked, saying how is this followed so accurately? Well, let me explain to you why this makes so much sense. Well, let's go back to 2008. Let's say in 2008 you were chilling, you were sitting at your desk with your eyes shut, not expecting anything to happen, and boom, out of nowhere I come and I hit you in the kneecap with a hammer. What is your reaction? You're probably going to hold your knee, you're probably going to jump up, and you're probably going to scream. That is a pretty normal reaction considering you've just been hit in the knee with a hammer. Let me ask you something else. What's the day today? It is the 20th of September, 2022. What's going to happen if today I do the same thing? I hit you in the knee with a hammer and you're not expecting it. You're going to grab your knee, you're going to jump up, and you're going to scream. Why have you just replicated that behavior? Well, this is human behavior, my friends. Human behavior replicates when it has the same environment. Now, why does this make sense when we're talking about the 2008 recession and comparing it to the recession we're in right now? Well, that's just the thing. We're in a recession right now, and we were in a recession in 2008. And when you look at how the markets were structured in 2008, the market was moving based on how consumers and producers interact in an economy. And then what happens is you get, monthly consumer confidence reports. And then what happens after that is the Fed, who make monetary policies, they go out and they make decisions on what to do on the interest rates and policies based on the actions of consumers and producers and how they all combine into the economy. So this, my friends, this is why we're following so tightly on the 2008 SPX fractal. In 2008, the cost of producing was going up. Consumers were having a hard time living with the consumer price index going up. People were making less real wages. Because of this, the Fed had to make the tough decision to raise the interest rates to battle this doomsday scenario. Now, This is exactly replicating now. It's the exact same thing. And what do we have right around the corner tomorrow? What do you know? In 24 hours, we've got our next FOMC meeting. And what is the Fed doing? Well, they're doing the exact same thing they were doing in 2008, and they're getting prepped for potentially a 100 basis point increase. There's an 18% likelihood of that. I think it's more likely 75 basis points is on the table. Chicago Mercantile Exchange predicts an 82% likelihood of this. But nonetheless, my friends, the Fed is replicating what they did in 2008. And when the Fed replicates their behavior, we should expect the markets to follow suit with this. And because of this, with our next FOMC meeting 1 day away, this is why I think it's very, very likely that within the next 20 days, until the 10th of October, we're very, very likely to come down and form new local lows. And these local lows are very likely to proceed with a bounce, retesting previous resistance and support. I can definitely see Bitcoin going down to something like 17k, 16k, and then bouncing back up to maybe that 17,600 before coming back down and inevitably making its bear market lows, which I've been predicting for it to do at the beginning of Q1 2023. The next local bottom is 20 days away, my friends, but we've got a long way to go until the bear market is over. So all I've got for you for this video, my friends. As always, stay tuned for more updates. Cowboy out. Peace.